Yo, how's everybody doing? This is Mr. Anderson, True Crypto 28 on Twitter. Today, I just wanted to do a little video for you. I want to do a review. Basically, we're going to review how we got here. Usually, I'll do a market update. The market updates element is really kind of simple, so I'll show you that within a matter of a couple minutes. But then I think it's important to really show how we got here. First of all, obviously, I have a sponsor here. This is Prime XBT. You can go to this address, check them out. I'll put a link below as well, so you can click on that. Very cool site, Prime XBT. I like them. They're always good people, by the way. A lot of cool assets as well, but also they give you a 50% trading account bonus to help you along with the process of trying them out as well, which is pretty cool. All you do is you go to that site, you register, and then enter the code TrueCrypto, and you'll get a 50% bonus added to your trading account itself. So that's pretty cool. We do appreciate them with the sponsorship, so that's awesome to also give me free range to do any type of video I want. So they're not basically making any demands from that standpoint, which is super cool as well. Basically, what I would say to you is that I want to do a review here, and I want to keep this review very specific on technical analysis in terms of the footprints. Reality is that, I would consider technical analysis, I think really just about anyone should consider it this basically like detective work, right? As that is coming in, you're making an observation on what has happened. That's it, not what will happen. Of course, you're going to make predictions of sort or take positions, but technical analysis is not about predictions, no matter what anyone tells you. It's about reading what has happened. Because nobody knows. I'll preach that till I'm blue in the face. If someone knew, you'd be a trillionaire inside of a couple months or weeks, right? It's not that hard. It's basic math. But the point is that nobody knows. Well, we're trying to observe the data to try to give us edge, right? So we'll talk more about that down the road. But the idea here is that I do want to show you some of these footprints of how they unfolded. It's not about like, hey, look at me, I was right about everything. Of course, I was not. And even some of the things I was right about, I didn't exactly play it the right way. So there's that as well. But it should be fun. I think you'll enjoy it. We do a little bit of chart nerd type stuff here, and I won't try to fit it all in one video. I'll probably do a few of these early next week as well, so that we can kind of go a little bit deeper. But I do want to kind of jump in to show you the footprints, etc. Now I'm going to go pretty fast because ultimately, if I break it down too slow, this will be a very long video. So I don't want to do that. For some of you, that might mean you got to rewind it, stop it, pause it, watch it over a couple times, etc. If that's the case, I apologize ahead of time. But it's for good reason, okay? So once again, Prime XBT, definitely check them out. It doesn't hurt to peek over at the site, etc., and give them a look. But let's go into the review of what took place. So the first thing I'm going to start on is the high time frame, and this is the weekly, right? So what you'll notice is obviously everything was pretty beautiful. I don't have to, the moving averages are bothering. I can kind of remove them real quick, but it's not too necessary right now. But regardless, right, we'll keep this up. We just started a beautiful expansion on the weekly scale. This is something that was magnificent. Even the pullbacks were mostly contained. This one was a little bit ugly, but regardless of the fact that there were certainly some warning signs in here, which we'll talk about, the biggest thing that we did notice at the time, mentioned it at the time, stated it at the time, is that you ended up in a situation where you got a weekly scale swing failure. What does that mean? It means that you made a run at highs, made highs, so intra-week we broke the high, and then ended up closing the candle below what would typically be the breakout. And what you'll notice is we didn't have any of that on the way up, right? So you broke out, you ran, you broke out, you ran, broke a little higher, maybe a little bit of a consolidation, broke much higher, consolidation. Once you broke out, you ran a couple candles at least. What looked like a breakdown, broke out again. Now on this one, you broke out, you did start to get a failure pattern, but not a swing failure. But you see it did close above the level. So there was some concern here, right? This didn't expand the way you would have wanted, but at the same time, you did not get the swing failure itself. You did get a failure pattern that went back into the range. That was a little bit concerning, but it held up pretty well. And then ultimately at that point, this was the biggest initial sign, right? That was the initial one that said, I mean, there was other signs. I shouldn't say it's not the earliest sign, but it was the big one where you said, all right, high time frame, swing failure. I spoke about it on Discord the very moment it happened and said, we don't like that, but we know we have a lot to look at in terms of the range, right? So that's that. Let's switch over to a daily scale. And I'm going to get into something like the daily RSI. RSI, I can tell you, is, as far as the traditional indicators, it is the best traditional indicator there is. Most people, it's also the most understood. The majority of people will tell you that it doesn't work, it's for overbought, oversold, and all the same nonsense that you ever heard. No offense to those people, they have not taken the time to learn RSI. RSI is a some people use, I'm not even going to get into naming all the different types, but just like other programs are an all-in-one type of system, RSI literally is an all-in-one type of system. I don't even teach it myself. I teach tidbits of it when I used to teach because it's just so comprehensive, right? I mean, ultimately, in my opinion, you need to study RSI hardcore for over a year for it to then begin to really sit into where you understand all the nuances of it because it is a beautiful indicator. And it can tell you things that are magnificent. Okay, so let's just look at some of the standard things very quickly, right? Again, I'm going to run through some of this. I'm not even going to mark it all off on the screen, but what you notice here is that we raced up to this ridiculous level, close to 90 RSI, which was a beautiful thing. But ultimately, in doing so, we started to set some divergence. Again, hopefully you'll bear with me so that I don't have to show you every single one of these or get too close because, again, I'm trying to shorten the time as much as possible. But what you'll notice is that the price went higher, whereas RSI started lower. So we did start to see some elements of bear divergence way back here, which was enough to say, okay, well, let's just kind of keep an eye on it. But what ends up happening is these can be canceled out as you get what's called hidden bull divergence. And we did start to see that not only here, but here as well. And then once you take out the new highs, you don't need to learn this right now. Again, like I said, it's a long process to learn RSI. But the idea is that you're essentially canceling out the bearish divergence. The other thing that you'll notice is that in uptrends, bear divergence is something you'll see a lot, right? Strong trends are going to show a lot, strong bull trends are going to show a lot of bear divergence. That's actually very healthy and very normal part of the process. It just means usually that you need to take your foot off the gas a little bit or that you're entering in a zone that you have to kind of keep out an eye on and watch, okay? But what's happened here is that we hit a situation, and if I don't have my indicator up, I'm not going to bring it up right now. Probably in the next session I'll do that. But basically right around here, we basically hit a session where it was moon time, right? Like I made that announcement. Discord, this is before 12,000. Moon time, you guys might remember, it was at 4,000 that I said we're going to 14. Everyone said I'm nuts. But I didn't have the hell of a signal there. That was just based on the fact that I believe that there was a black swan slash white swan type event with COVID, and that essentially it was just pausing what was going on. But that's neither here or there for now. Ultimately, what happened is that this here was an actual signal, right? So this was a signal to which I said, oh, we're definitely going to all-time highs. We're going to all-time highs for sure. And we're going to break. In fact, I think I said I thought we'd hit 25 to 30,000 by year's end. And we ended up hitting just around that area, right? In that 28 range. So it seemed like a crazy prediction at the time, but it ended up coming true. This is not a, hey, look at me, I got it right. None of that matters. Okay, it's not about that. The point is that this was a hell of a formation. When you see a formation like this in RSI, when you're living up above 70, that's a hell of a thing. Now, this is a normal rejection that you would see. I'm not going to get into these moving averages again today right now, but just know all I'm doing is putting some moving averages. I choose these. You can use many different variations. I put different variations of them. Sometimes I'll put a 21 and a 55, et cetera, et cetera. It's just giving me different looks. You're essentially just taking the RSI and smoothing it out even more by putting some moving averages so you can take a longer term look at how momentum is working, okay? But the idea is that this spot right here, I'm bringing these things up for a reason. This was a spot here where it was a little bit concerning, right? You had to say, okay, this could be a potential rejection. But instead, what happened is you went to a hidden bull divergence. The RSI makes a lower low, right? While price does not. Ah, that's good. Now, let me just bring up really quick if I can. I want to bring up a chart that I produced because it will help somewhat with this. Okay. So again, we don't have to break this down too much, but this is a tweet that I put out, right? So if you see this chart right here, you see how we go back in time, and I said the same type of thing. We're looking for essentially scenarios where you make a lower low in price and RSI. You want to see that there's some element of confluence. So right here is actually the spot that I was just talking about. You did make the lower low in RSI, but not price. Well, that's actually hidden bull divergence. You did do it here as well, but not in price. Also, you have a situation to where it's bull divergence, right? Hidden bull divergence, they'll call it. I don't know why they call it hidden, as if someone's, jumps out and says, surprise, I was hidden. It's pretty clear divergence, but for whatever reason, they came up with that particular name for it. Regardless, in that situation, same thing occurs. Well, okay, so That worry becomes aborted at this point because RSI makes a new higher. This is confirmation. So I'm getting momentum confirmation of my price action. Okay. So here we are. That's way up here in 32,000 land. This is super healthy. It does it yet again right there. Now you're basically at 40,000. You have confirmation where RSI and price action are green. Awesome. Come down here. I can tell you this is a great place to pivot. It's exactly what you want to see. The 40 level is a great place to pivot for RSI. It's a very healthy thing. We were super bullish here, as you know. And then again, reclaiming this red moving average, awesome as well. Soon to break out, and we did. But here's where some of the problems begin. Suddenly, we're back in this picture again. What's the picture? Well, you set a top, which of course you don't know until you get this low candle right here to set a local high, right? So it's just a local high here. Once you have a candle that takes out the high of the previous candle there, okay, some element of a pivot. And in this case, it did end up going higher, but just bear with me for a moment and understand that you end up dropping here in RSI. Okay, no harm done. It holds up, but it is a concern, right? Because it's the same scenario that you saw back here. Okay, well, we want to see things go again. Well, guess what? You reclaim the red. Good. That's enough for some bullish action. Enough people will jump on that type of sign. And guess what? You did race off to another high. But you notice that the effort is there, but you're not getting the result, right? You barely made a higher high in this situation. You went from about 57 to about 61. If I'm off by a little bit, I apologize. At this point, I was majorly concerned. I can find some of these tweets pretty damn easily. Let me just see what I'm here. Okay. I mean, this was like the biggest first. Again, this isn't like, hey, look at me, I got it all right, I'm the best. I don't mean that at all, right? But I was concerned at this point, right? And this is, hey, if Bitcoin's going to take a break, this would be the most likely spot for it to occur. I've only shorted Bitcoin twice in the past year, other than scalp. So this area is one where I'm going to take my foot off the gas. This shows my indicator as well. You see this here, that's a purple line. Clear divergence was coming in here as well. So we were starting to see some issues in terms of how that happened. Same thing here. You see purple to the purple. Again, during that high, there were some issues coming in. So there was enough upward thrust still just carrying this thing upward, like a melt up type of scenario. Now, let's also point out the fact that I can throw in some trend lines and things of that nature here as well that can show you that there's a concern. You can look at a wedge here formation. There's a lot of different things going on. If I go ahead and mark everything off, we're going to be here all day. I'd rather put this on log if I was going to do this, but you can kind of see how this thing was motioning out this way. And then what ends up happening is you go from this low, we just want to touch and touch. Normally what I would do is I would go into my coordinates and actually make sure I'm doing it perfectly. In this case, we go from a touch to a touch. Okay, here we go. Another thing I would do, by the way, in this situation, under normal circumstances, I'm going to remove this. So this is something I normally do. You're not going to learn this now again. Maybe I'll do a whole video on this, but I don't want to cramp myself in a position where I'm telling you I'm going to make 20 different videos either. But we can do this. But here's a simple thing. So you already have an established line here. Once you had this 2 points and you started to break up, say, okay, these are 2 points of interest here. And then all you have to do here is make a parallel channel, preferably on a log chart, and then go to where you previously topped out on that run. So I use 3 points, 1, 2, and then I go backwards to the high, right? Well, in a normal situation here, you're usually going to channel up. Now, I can go further back with this so that you guys have an understanding and show you something different. But again, the fact that it didn't even reach up in this level was also a concern. This time, it didn't even reach the midpoint. I'm going to get rid of this for now because I don't want to confuse you too much. But the idea is eventually you actually lose this level, come back and test for rejection, and then ultimately never reclaim this level. Not good. Not good at all, right? So that's problematic in many different ways. We're seeing some confluence of some issues. So that's why my thought, by the way, was not, hey, short this. I didn't say that, right? I'm saying this is a spot that I'll begin to open my mind to the possibilities of shorts, right? And I ended up hedging a good portion of my Bitcoin somewhere in this area. I covered it too early, in case you want to know, so I'm not perfect either. I made some mistakes. I was occupied at the time. I had a position to cover it while I was basically unavailable for several days. But regardless, it happened that way. It was my mistake for setting it there in the first place. So I did cover it too early. So I'm not perfect by any stretch of the imagination, but as far as looking at it as a trade, it was a great trade, right? So it still did me well in terms of versus just holding Bitcoin. Now, in this situation, again, now we're seeing another situation that says, all right, well, for some reason, there's a problem there as well. Okay. What else do you see? RSI now struggling. Right now, we're starting to see this continue on. where I end up making yet another high, okay, because this is again a hidden type of divergence, right? You could say, oh, this is hidden bullish divergence. Great. You end up making another high, but again, weak. Then it happens again. Come down with RSI. Uh-oh, are we starting to break down a little bit? No, another bullish divergence, but now very weak in a failure pattern. What do I mean by that? Essentially, we took this on close and then within a few days fell back within that range, right? So that's why we have that there. Well, the moment that happens, now I've lost that range. This was my previous high. I'm going to drop this level right there, right? Because ultimately, if you were down here, you want to reclaim this level now. That's how I would look at it. And by the way, this is subjective. You can change your mind of how you want to look at some of this, but this would be the level I would look at. In fact, I would get very specific with this, and I would say that I want this to come to the high just before the candle close. So you see I have this wick high right here. I want to go to the highest close prior to that before that particular breakdown right here. So here we are. We tried to run up. It failed. So I'm going backwards, looking for the high that's there. This doesn't need to be perfect, but you get the point. So why do I show you that? Because that produced a chart, which I can also bring up here. I'm going to show you something first, which is this. We then had this pullback, lost the zone, but there was a lot of support here, guys, right? First of all, you had this Elon candle. This is where it gets really interesting, right? So this is the Elon candle. This was actually one of the things that ended up costing, I shouldn't say costing me. That's the wrong word, but ultimately later on, what I would call a mistake is that this is the Elon candle, right? This was the mega pump. And what I was saying during this pullback is I said, yes, everyone's super bearish. Yes, we lost the zone. Yes, we had a failure. But people will want to buy this breakout. So you had this breakout from here to here, and then you broke out higher, essentially, right? And I said that on a tweet. I'm not going to bring that tweet up, but I assure you that I did say that. And then ultimately, the moment you started to enter that zone, you had one demand zone on top of a second demand zone. It's a nested support, right? And then even below that, I would have actually preferred this to go further in. I would have liked a deeper test into this, tap the 21 week on that attempt, and then go. Didn't happen. Either way, I will tell you that this thing did bounce. This is a hell of a bounce, by the way. On BitMEX, you're talking about 46-ish to 59-ish, $13,000 bounce. But the rejection came at the worst possible spot. But I do want to pause things here because a couple interesting things happen. Again, I need to bring up a chart for this. Do I have the daily RSI? Did I already show that chart? Oh, range rule. Okay. I do. Okay, so this is good because it was at this point where we did bounce. Okay, well, that's fine. Good job. You bounced. We didn't know this was intraday when it occurred. I said, if we bounce or range out a bit, right? So what does that mean? I was saying, like, look, because we were just right around here at the time of me making that particular chart, I was saying, if we bounce, clear this particular candle, because we could have technically ranged out a little bit more and even went lower, but I wanted to bounce and then essentially see a range and then come back and see it hold, right? So this is what I'm referring to. If, read this right here, if we bounce or range out a bit, keep your eyes peeled for this. This is the most important thing that happened. This is why I say RSI is really just one of those things that I promise you're going to have to start buying Wells Wilder type books, jump into year-long studies, and it's a lot of trial and error and things of that nature. But if you were going to try to master something, this is one thing that most people seem to get wrong. It's not easy, but you can do it, and you can get a lot of clues. So a lower low on both RSI and a range low on close would likely begin a deeper liquidity hunt, which could open the doors to the previous range. The bull play is a case of rising bottoms in price action while setting a divergence in RSI or simply a march up in both, with the next 60 to 70 RSI pivot being the key to further into. So what I'm saying there is that I'll show you. Basically, because we didn't know at that point, right? So we're right around here, and I'm saying, well, I don't know if the price is going to range out or not. This breakout didn't occur yet, but whatever it does, I want it to pivot wherever it's going to pivot, and then come back and show us a divergence, or race up and give me an RSI above 60 or 70. Above 60 or 70. Well, look what happens, guys, right? Instead, we come up, first of all, we get resistance at the worst possible spot. Do I not have that chart? I can bring that up pretty quickly too. Okay, yep, there it is. Okay. These are keys. I don't just want you to think I'm making up BS, right? This is the moment it happened, right? The moment it happened. Resistance, resisting, May 9th. Resistance, resisting. Resistance, resisting, right? Okay. So at that point, it's a concern. It's a concern. But it happens, right? It's a normal place to resist. What you want is to see that this time the dump from that level, which was aggressive, just is less aggressive, that the supply there is not as aggressive. We did not see that at all. We saw a couple days, a very terrible reaction. Look at this. Right at my moving averages, it rejects. Some might say it's a coincidence. I tell you it's not. And then huge dump. And at that point, this is dicey, right? It's a very dicey situation. The other thing, let's see if it's on one of these charts also. Okay. Well, first of all, what this tells you, right? You see this number here? 28617. 28617, right? This would open the doors to the previous range. That's the low possibility of 28617. Okay? So remember that. Now here we are. Footprints, right? We're studying footprints. We're detectives. We're trying to figure things out to just have a game plan, not about being always right, always wrong, or anything along those lines, but just basically putting yourself into a position to have yourself a game plan and be prepared for whatever scenario. I think I do need one more chart here, which is because I did put one out about a bullish weekly RSI pivot because we did have one of those, right? So I did say that, but I want people to understand this. There's a zone here, right? It says RSI, if is always the keyword, if RSI reclaims that red line up here in this above 70 level, it did not. So it never came into fruition. The idea was if we pivoted here, then this could be one hell of a face melting type of rally. That's technical analysis. If this happens, then I take a position. It didn't happen, right? It did not happen. We didn't get it. Not only that, look, because composite operators, who's the composite operator? It's a hindsight term. When you look back at what happened, you say the smart money, they were the ones who got it right. So whoever played it perfectly, whatever imaginary group they are, those are the composite operators, right? So that's the key there. So we got that, and you got a situation to where I will tell you that there was definitely some surprising elements to that, and that you were starting to see a contraction in volatility. Normally, in a high time frame distribution, that's why I'm still open to the possibility of it being a local distribution, but in a high time frame distribution, you would see that it would happen in a very high volatile setting. Normally, that you get that huge breakout, right? You get that blue sky breakout that just runs off to the moon and then dumps that same day, right? We've seen that many times before, and usually with Bitcoin, it's actually exaggerating that point because of the way that the supply characteristics are. So it is what it is, but pay attention to this, right? Smart money will likely look to hold this line from here to here. This is just a technique. Again, I'm not going to be able to teach these techniques in the moments of a day, right? But I can show you what I was talking about at least, so you have an understanding. So what I tell my guys here is like, all right, look, okay, let me erase that because I used the wrong one. We set up a play where we say, look, we're going to look for longs in these situations, but if it breaks, we look for shorts, because in this situation, really this should come, and if it doesn't, you're supposed to look at this to make a higher high when you get this type of play. Now, one of the complicated elements here is that when it did close, I would say that you did have to be a little tricky little sneak that held the 21 week, which is a nice thing to hold and to begin with, right? So it did hold it, barely held it. I didn't like the way it held it. I will tell you that it held the 21 week, but didn't hold the 20 simple. That's not a good look. I never like when it's in between, but regardless, the play that all my guys can attest to is that you're looking for this to make a higher high, and if it does not, if you lose this level, you're looking for shorts, right? So that's how that works. That's the point of this line. So that's why I said people that are looking to long this guy are going to want to hold this level. Well, look what happens the moment that level broke, right? We could fix this. It was on a daily scale, so let's just move it. It's going to be on a weekly scale. We could bring it to what the daily view would look like, which is there to there, perfectly on close. And what happens? You lose it on close, 2 days of rejection, good night. That was the setup. That was the play. And from that standpoint, the technical analysis certainly worked. But also, don't forget, we said we need RSI to go back above 60 or 70. Above 60 or 70. It did not. This rejection was a terrible spot to reject, right? We already noted the fact that it rejected where? At the main resistance. It's not what we wanted, right? So it's a situation to where you find yourself in a very negative situation. Also, Elon Musk going crazy for whatever reason, thinking, hey, this is a great time to put down Bitcoin, even though we own $1 billion worth of it. Couldn't possibly tell you how this guy painted himself into that type of corner, but it is what it is. So that's what came about with that situation. And then ultimately, you open the doors to what? 28,617, right? What am I talking about? We just spoke about that 2 minutes ago, which was where? Right. Right there. 28,617, right? That's the red line. You can open up everything to that level if we make a lower low under 47303 and make a lower low on RSI. Okay, so let's just show you that that actually occurred. Now, it didn't happen until right there, right? But it did happen. So let's show you. We got, I want them both. It's not one or the other. It's both. We need both to occur, right? And when did both occur? I'll zoom in on it so that you have an understanding. It's right there. That's when the low hit on RSI. At that point, we were already lower than this particular level here, right there. So you have a confluence of momentum and price action. The price there, 43582. Well, at 43582, I have a signal that's telling me we can have a low of 28,617. What was the low? A little bit lower, 28,157. So it actually dumped a little bit lower on BitMEX. So that's the idea of what the technical analysis can give you to paint some pictures and understanding like, hey, this is going to show us a sign of weakness, right? So this was your sign of weakness at that point, understanding like, oh no, this is confluence here where momentum and price action are marching together, okay? So we can get into things like, is this a distribution or a reaccumulation? Well, I mean, there's definitely a distribution within it, right? So, I basically was stating like, look, in my opinion, I see this as more of a complex reaccumulation. And actually now in hindsight, I had a distribution chart. Oh, man, let's see. It's important to show this stuff because I know that maybe not all of you guys are just going through my tweets and everything, but distribution. Because you always, you want to play both. You want to have both sides available. When things align with the plans that you've made, the possibilities, that's when you take a trade. I'm not trading my opinion. My opinion doesn't matter. My opinion probably sucks, right? So that's the kind of the idea behind this. So in this situation, it doesn't really matter my opinion. In fact, I think this chart is the reason I'm showing you this because I think I added an opinion here, which was wrong, which is great. It wasn't on this one that I put. Okay, well, there's another chart where I said, in my opinion, this is something else, and it was wrong, even though I had showed. I think it's actually right here. Hold on 1 second, and then I'll show you the distribution chart. Where are we, guys? Is it here? In my opinion, this has the look of a reset, but we will let the charts tell us. See what I mean by that? I'm saying the chart will tell us, not my opinion. And the chart did tell us at 43.5, we're going to this lower range. That is the biggest potential scenario that's going on here. And sure enough, we did. Not only did we hit to 28,617, we went $500 below it, right? So that's the idea there. But I did want to bring this up as well because here we go. Distribution story. This isn't the right one. I had two of these, actually. Let me see. Right here so I don't confuse the hell out of you guys. All right, this is the right one. Okay, so this was May 6th, right? So long before all this happened, May 6th, and just kind of given the understanding of like, all right, this is what it will look like if it's a situation. This is the channel I was telling you about before, right? So you channel this guy and kind of give you an understanding. There's two ways. You can go from top side or bottom side. In this case, I can use the top side as a resistance channel and then connect it to my first low down here. And then that's just the area that you want to see hold, right? So it's the same type of situation. Regardless, you can get very specific with your channels and they can give you a little bit of edge to do things like that, especially with your trend lines and channels, etc. You don't want to be overly subjective. You want to be pretty specific, but come up with a game plan that makes sense for you. Now, in doing that, what do we end up showing you here? We end up showing that this was a distribution story. In this case, I showed around 32,000, but we had that scenario line up. I also had one that showed reaccumulation. The reaccumulation situation is one that's also very similar. It actually starts out just like this, and then you get a drop, usually not so pronounced. This would be a weaker reaccumulation if it was to end up being that, but ultimately you do get a local distribution within it. So the charts match. And the idea is, what I was trying to explain in one of those tweets is not to trade my opinion, but to trade the chart. And I've also pointed out the fact that you want to wait until the ideas will line up, because usually you're not trading anything related to Wyckoff till much later in the phases, right over here anyway. But you can come into a position where you say, oh, wait a second, this is either this point in reaccumulation or this point in distribution, and both say we're going down. Aha, in that case, either clear out the way, go to cash, or, as I knock things over because I'm talking with my hands, or put myself into a position to where I say, aha, in this event, I'm going to short it or look for some shorts or take some smaller position shorts, etc. That's up to you. But you end up seeing that we had many spots. We had the resistance lined up. We knew the exact spot of the resistance. We knew that the RSI needed to obtain a certain level, and it did not. We knew that RSI certainly could not take out the low while the price took out the low, or we were screwed. That's exactly what happened, right? So those are the scenarios that you could play out. It's always station to station. But the other interesting part that I brought about this was this Elon candle. Well, meanwhile, as much strength as Elon Candle had, some of that goes out the window when the guy is sitting here deciding that he's going to burn Bitcoin for whatever reason he comes up with in his mind. Maybe he wants to buy more. I have no idea. But the point is that it's an interesting situation where you say, well, wait a second. If this was the Elon candle, now suddenly it doesn't have as much strength. It certainly doesn't have as much strength once you get a third test anyway, right? So, I mean, technically, I'm not going to count this as a test. This is part of the normal formation. So I would say test, second test, right? Especially depending on some exchanges went even lower. Third test that actually gave a terrible weak bounce, right? And then finally, you're ready to invade that territory, right? So we had plenty of opportunity. That's the bouncing ball look, right? So you bounce a ball, it doesn't bounce as high, etc. And then finally that ball is going to start rolling, right? So in this case, or you can look at it as skipping a rock on the water. So you skip a rock on the water and skip, 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 and then it sinks, right? So it's the same type of situation. Here you are, you're skipping that rock off of the support, and then eventually that rock's going to sink, right? So that's one way to kind of look at these type of scenarios, okay? So that's it for now. I don't want to go too deep. I'll give you a very quick market summary because it really is simplified, right? So let's just kind of look at this. We're in a range. I mean, there's not a whole lot of other ways to look at it. I will give you this. Actually, I should start off with this high time frame to say, look, you need to hold the line again, right? You always, obviously, the most important is this horizontal, right? Some might debate that, hey, maybe this is the line to hold, maybe that is. Either one, looking at both, they're close enough. You want to hold those for sure, right? Because otherwise you're talking about leveling down to maybe this area, maybe this one, maybe we flip to the weekly. I'm not going to do that right now and kind of go from that scenario. I'm going to give you a ray on a log scale, right? So get a ray. Under normal circumstances, I would open up the boxes and go literally to the coordinates here where I would mark this to the absolute low and mark this one to this absolute point. I don't really have to do that. I can kind of zoom in here and get close enough. That one's fine. That one's fine. You see a touch there. So we got touch, takeoff point, touch, takeoff point, right? So I'm not picking two random spots. These are value points. This is extreme value, right? That's how you would look at it. Why? Because although it's 2 points, both times it touched, it showed extreme value. Well, guess what? Look what happened the third time we came in. It bounced like you wouldn't believe. All right. We came right back. Another bounce came right back. Okay, we got another solid bounce. This was on a Sunday. Now you're playing with that again. I would say it's pretty damn important to hold the line. Now, look, diagonals are not as important as the horizontals. So, of course, you can get some kind of ugly formation, but usually there's not a lot left, right? I threw up a chart, which I'm not going to bring up right now, but I did throw this chart up here previously where I said, look, you had this situation with something like that where I said, I think I even had one here too, right? So I think it was a triple where we had this guy first, and all it was is like, oh, when we start to lose these, you're starting to worry because you had a little bit of a parabolic formation. So you usually go station to station, right? So it finds its way to this one, a little bit of a bounce, rejection, finds its way to the next. Well, the next one, you don't even want to know where it's at, right? The next one's not even close, right? You got to go way back here, start drawing some black swan stuff, go back to years ago. It's an ugly thing, right? So let's not even worry about where the next one is. It's not pretty. So the easiest scenario would be hold this line, right? So that would be part one of what I would be looking for. In a dotted line, I'll give you this, which is to say within that, there is a pattern that's been forming that's a little bit less dramatic, right? So I'm actually going to go from the low. I'll look from the low of the move to here. And I'll redraw this in a minute. I'm going to still start from the low, and then we bounce to this level. Now you might say, well, I don't want to do that. I want to, and I want the most touches without exceeding a close, right? So it gives us this like funky little triangle. It's gonna be a little different on different exchanges because different exchanges reacted differently. You might want to start from the top and say, I'm gonna take the dump candle. That's up to you. I'm gonna take from the bounce, right? So I'm looking at the bounce itself. I'm going from here to there. You might say, oh, why don't you connect this one? No, I want to see the next pivot, right? So bounce, bounce. That's my pivot point. Technically, I could even go a little bit higher like that. I just want to touch as many as I can there without going in. Sometimes what I would do in this situation also is I would bring it to like a lower time frame that a lot of people use. 4 hours, very popular. And I might then clone this line and bring it into something like the highest close. Something like that, just kind of give me an idea of when we start to enter that level. Just move that on accident. And I would also sharpen this up because I know I'm taking these 2 points. So the 4 hour is going to work like that. And I just want to touch this level right here. Like that. So in this situation, at the time of me making this video, there's 2 hours and 20 minutes left in this 4 hour candle. You'd want to see that close above that level. So you want to see a little bit bounce because it's touching both, right? I'm getting this level, and at least continue this, awkward looking triangle scenario. But what are the hopes here? Well, I mean, the reality is we're in a range, right? So we're range bound. That's pretty clear. That's why I didn't spend time going over a market update. Here's your range. If you wanted to set a fib on this range, you could go top to bottom, bottom to the top. It's completely up to you what you do. I don't even know if I'm going to bring one up right now, but let's go ahead and do it since I started talking about it. I'll go from the bounce to the highest point. Again, this is perspective of how you want to look at it. And what did you end up getting? You ended up getting a bounce to this particular level, a pullback to the 786, a bounce to the above the 236 if we're using that as our starting point. And then eventually we're flirting with this midpoint here. So this would be a normal place to try to bounce, whether you bounce in the 0.5, weaker would be the 0.618 since you already made that 76 bound, and then try to at least continue this on a little bit. Technically, crypto has this way of kind of finishing off triangles for whatever reason. You don't see that a lot in traditional markets, but you could make it till Sunday, Monday, Tuesday-ish, technically, if this thing is going to hold. So let's just say Monday, you should have some type of resolution if it holds. We don't know that it's going to hold, right? You might have to throw this out and redraw. By the way, you could end up in a situation where this thing dumps down. Remember, this is technical analysis is not, hey, I drew that right, so this is what it is. What if this thing eventually goes to here? You know what we're going to do? I'm going to redraw this thing. I'm going to say, oh, okay, well, my zone is a little bigger. If I get a bounce here, maybe I run to the 886 and somehow holds and I'm bouncing. Like, okay, well, I've extended my range. So we don't know. That's why it's a study of what has happened. As of now, we know what has happened, but new data comes in each and every time. And you have to make adjustments to that. Not bias, not gut, not emotional, frantic, I'm in love with Bitcoin type of stuff. No, you have to be able to separate yourself from that and realize, like, okay, this looks like it gives me edge. I like to take this type of play, etc. Now, I will show you one other thing since I'm here. I mean, this is already longer than I thought, but I'll show you a chart. This is some nerd stuff here. I'm not going to go too deep into the nerd stuff today, but this is a 2-hour chart, right? But within this chart, I just want to explain a few things. You're looking at something crazy. I don't want you to think I trade like this or anything along those lines. This is for analysis, right? But I want to give you an understanding of how this occurred. This is 59,000. It dropped to about 28, okay? This here is my own proprietary indicator, right? And this is showing up here. You're just going to have to trust me. This is the daily scale. Even though it says 2 hour, this is showing you the daily scale. You see red, you see green. Guess what? In red, that means daily bearish momentum. In green, bullish greenish momentum. Now, does that mean it's going up? No, it just means the momentum picture is on their side, right? So bulls have the momentum on that scale at that moment. Okay? That's all it means, and I hope you understand that. Black would mean neutral, right? It hasn't made its decision on that. Why is there some difference? Well, the difference is that there's price action and then there's momentum. These are two different terms. You got to lock your mind onto that, right? You don't want to get yourself into a position where you ignore momentum, but at the same time, it's market structure first always, right? The price structure is what matters most. In fact, to give you a quick example of this, you can see that there are times where you have red momentum that comes in on the daily scale, and sure, price came down, but it held, right? So structure held pretty well. Especially if I go on earlier, you're going to see a lot of that as well. Where yes, price did pull back, but the structure held pretty well during those times. And then we went again when it was the green's turn. So I'm going to summarize this by telling you that aspect. You might have to rewind this again to understand that. But then I'm going to show you that this first chart is a 2 hour, this is a 4 hour, this is a 6 hour. Daily, 2 hour, 4 hour, 6 hour. And then when I tell you something, you're going to have to take my word for it that I'm not BSing you. When you see the purple come in, that means that on this particular one, that there's bearish momentum in that particular point in time. So 2 hour, 4 hour, 6 hour. When you see them all line up, that means a 2 hour, 4 hour, and 6 hour all have bearish momentum, but that only means that they're countering the daily. Okay? When you see the blue pop up like that, that means they're countering the daily, which was bearish, right? That's important to understand that the low time frames are only countering the higher time frame at that point. Time frame analysis is something most people don't get. In fact, time analysis, time being the most important part in understanding trading, is something that takes the longest for people to understand. Okay, many years. It took me many years to kind of get this, but it's okay. So now, when you see red, guess what? Confluence. So you're getting confluence of the low time frames with the high time frame. So what happens? Why does the picture change? Well, you end up getting this resistance here. And suddenly you go to a scenario where it's daily red. Okay, we've survived daily red cycles before, but look at the confluence. You end up getting a set of confluence, no big deal. A weak counter to a lower high. See this? This is the counter trend. It does not bring the daily back, so daily remains bearish and now has to endure another cycle of the 2, 4, and 6 hour. They have to recycle. That's this purple line. That's recycling down, and that's how you get this heavy pressure, right? Pressure. These are pressure campaigns, okay? Now, you do see some periods where it was a little bit broken up. You had just the 2 hour, then the 4 hour, then the 6 hour, okay? So there were times where you had some chop, the 2 hours trying. You see some upward movement in it. So there's some decent choppiness in there. You even had a counter right here, right? So you had a few hours of counter, but nothing happens to the structure. The structure remains bearish, right? You're in the situation where structure remains bearish. You tried to do something here, right? Structure tried, just couldn't clip it, fell right back into the bearish structure that it had before, and then eventually loses that zone. This is problematic. So now you scale down, counter trend only gets you to a rejection point, immediately back into another bearish situation here. And you could see how this compounded, right? So you'll notice how long this lasted. This didn't happen before. You were seeing different streaks. Now you've seen it on the bull side, but the confluence here was overwhelming. You just had cycle after cycle after cycle, right? And that's, I'll be honest with you, that's an easy trade. I was dealing with worst days of my life, so I didn't get to participate in some of these easy trades, but I have this chart for a reason. I mean, this is the only look for shorts type of scenario when you start seeing this flash with these red lines like this in the midst of this bearish cycle that you have here. You didn't see that before. You might take a quick look right over here when things were okay in this little area, and you're in a situation where, yeah, you get a 2 hour confluence with the daily. That's not enough. You want to see confluence amongst all those lower time frames, and it just doesn't happen. Well, now guess what? It has been trying, right? So you did try it, a little bit of an effort here, right? You went to a little neutral stance and back into red. That's how you had that Sunday dip. And then finally, it finds its way out. These counters that they're making, right? You see these counter scenarios in the midst of the blue lines would only come up if this was red, right? So because the daily came into a neutral standpoint, that's why you don't see the blue. But anytime this purple is above all these lines, that's where you would see that counter. So really, the counter started instantly. It was just so strong that it turned this actually black. So when you just see this black, that's actually more powerful than seeing these blue. Okay, so it was a hell of a counter. We talked about that one also. The only two, someone said to me, "Oh, you've been so bullish." Not bullish. I said that I don't believe that the top is in. What I believe doesn't matter. First and foremost, I don't believe the top is in. I think we'll continue on. I could be wrong. But the only things I posted since this 59,000 came into play, aside from the fact that I posted that 28,617 was possible, I posted along literally right here in this spot, and then literally right there, I think at 31.5, I think buyers will come in. So that was my two spots that I even talked about anything bullish, other than saying like, hey, don't sell your spot unless it's on your terms, right? So that's the only thing we'd say. But regardless, just showing you what's taking place now. You did see another pressure campaign come in, and now you're seeing confluence on these lower time frames. But at the moment, it has held. The daily hasn't rolled over. This isn't a pretty picture, though, right? You're talking now, at the time of making this video, 2 hours and 13 minutes. Not good. I don't want to see this guy turn red, and it very well could if you start to see continued pressure. And then you might end up in a situation where the pressure that you've seen here might stack up against you yet again. Talking about all the low time frames versus this higher time frame, and the dynamic picture, meaning the moving average picture, is bad, and that matters because you're in a situation to where momentum traders are on the low time frames taking shorts in that situation, and they're just piling on for quick in and outs, and that just adds to the fight. So what everything is based on right now, to get off of that, is that you're basically in a situation where you need to see absorption, right? So there's definitely, this is high value. Look at the bounce. That is an amazing bounce. This is high value. That's a hell of a bounce as well. Not as nice, but it didn't go as deep either, right? It wasn't like you got a swing failure or any scary thing like that. So it would be nice and bullish if you're continuing to see absorption along this level. Now, we may have to change this level. This may drop down. We might have to make an adjustment to the line. But at the moment, it's not the greatest place to be. Is that the bulls are banking on what? You're banking on there being an absorption coming in from hodlers, big money, people that miss the big move, people that have been waiting for lower prices, people that feel like, hey, if you want to sell it to me, I'll take it. We don't know that that's the case, right? So that's kind of the problem. You don't have the technical momentum players on your side. You won't for a while, right? You're not going to have them. I mean, anything under 4 hours, you're not going to have until you're above 46,000. Now, that number keeps coming down over time, right? If you look at the 1 hour, that number's down all the way to about 38,000 now in this range, right? Once you get back over here, hey, you can have these 1 hour momentum players that might join. You want this 1 hour to come, hold these levels, and then the momentum players will try to help you out. It hasn't happened, right? You never really held, right? So you want to see this guy make a little distance, come back, hold the level, and then you'll see anything H1 and below, those type of players will be on your side looking to give you a push. So if that is to occur, if we see this guy bounce right here, right off this line, which it is trying to do at the time of making this particular video, well, then you'll see some type of continuation here. And then eventually what would happen is that you'll make your way maybe either back to the top of this range, because obviously you do need to capture this to see what's what's happening. And there could be all kinds of things that are still possibilities, right? That's the exciting thing about this, is that this isn't it. It's not, hey, get this level and we're back to the moon. No, there's actually a lot of interesting things going on. In fact, I suspect that this is a high time frame move. So I think there might be an element that's a little bit misguided in thinking like, hey, clear this and it's over. Now, you do reclaim the 200. If I go to the daily scale, you are in a situation here where you say, all right, well, let me just take everything off for the moment. I can come back if I need to. I basically am in this position where if I reclaim this level, you end up with a situation where RSI has been climbing for you. You might find yourself in a position to where you get regular slow stochastic on your side, and you're due for some sort of an upswing when that happens. So the momentum buyers do join, and then you kind of push your way up. But in my opinion, you're going to get stopped outside, right? And because of the RSI picture, you're nowhere near out of the woods here. Again, the same scenario applies. This is all going to come to a head if we rally, right? So let's say we do rally. If not, you definitely want to hang down here. Things can get really ugly, right? So let's not kid yourself. Take out this low. Things can absolutely get ugly. You're down to one hope, which is a swing failure in that situation. That's not a place you want to be, right? Or some kind of epic V bottom. But regardless, in this situation, at some point, you're going to make your way up. You better make your way all the way up here, right? You better put yourself in a position to where probably maybe put in some kind of hidden bear divergence, which would be okay at first. It's not the end of the world if that happens. Who knows what price structure would be? Maybe somewhere in this range, maybe whether that ends up at the 44, 46, maybe even as high as 49. We'll evaluate that as we get closer. I like to go station to station. I don't want to talk about the next 5 steps. If you guys play chess, you're thinking several steps ahead, right? So you say, well, look, I'm going to make this move, and then if he makes that move, I'll make this move, and then he'll do this, and I'll do that. Well, sometimes the guy you're playing, either he's better or worse than you think, and he does something different. You have to kind of change that scenario. In this, you're kind of playing against a composite man. I'm going to take a view of saying, like, all right, well, these are a couple of options that can happen. But if the market does something else at that point, well, of course, I got to adjust at that time. It's the same scenario, right? So that's basically how you look at how these things go about. But regardless, aside from the speed talk session that you just went through, if you do reclaim this, I don't see you. We could stop out. That would be fine. I have no problem with stopping out here at the top of this particular range at dump point and coming back down. But it seems like you're probably going to get some of those momentum players back and push a little bit higher, and then we can begin this process of finding out. Because you do have a lot of supply zones, right? This is a supply zone. This is a supply zone. You have nested supply. You have multiple layers of supply. So I think things will build out, and you might end up with this high time frame pattern that's actually more exotic and interesting. So we'll kind of see how that comes out, if it even occurs. At the moment, obviously, they're facing a lot of bear pressure. We're just going through the what if scenario of like, all right, well, what if we get something a little bit different? That's it for now, I think, right? kind of summarize that. Went a little bit deeper than I thought I would in terms of what we're looking at. But one, I'm starting with mainly this structure right here. That's the zone that we're looking at above anything else. In the meantime, until this triangle breaks on close, on daily close, I'll watch it as well. Certainly, I'm watching this particular level. Really, on weekly close, I mean, we could lose it. This was an intraday loss here, but we could lose it technically on the daily. I've seen it happen where you do lose it on the daily, reclaim it by the end of the week. And hey, you have to look at this on a high time frame basis because look at where this line's coming from, right? So if I have a line that starts back in March of last year, of course I got to look at it on a weekly time frame. You know what I mean? So that's kind of the idea. So you're looking for a weekly hold again, and then seeing if this thing can say, all right, you know what, we push down as much as possible. Maybe it gets a break and at least tries back higher than we discuss it. I'm out for now. Once again, thanks to the sponsor, right? This is a good time to check them out as well and see if that's obviously Prime XBT. One more time, if you go to Prime XBT, use the code TrueCrypto, and that'll get you a 50% trading account bonus. So you just go to the site right here, and I'll put that for you, as I mentioned. Other than that, I'm out for now. Hopefully everyone's good. Enjoy your weekend. I'll talk to you soon.